The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we wrapped up Wednesday's trade action, the Federal Reserve came out with the as-expected 25 basis point rate hike for their May meeting. How is that impacting the broader market trade? And also, what was going on with grains today? Wheat with a huge up-day pulling quarter beans higher ahead of that Federal Reserve announcement. We're going to talk about all of it. Joining us now, Mike Zuzolo with Global Commodity Analytics. Mike, great to catch up with you here this week. And man, oh man, we were waiting on that Federal Reserve announcement, and then we watched this wheat market explode with a round of buying. I have to think it was just oversold possibly, and we got a good bounce here, a good money flow of the day. But what an exciting day with a lot to talk about, Mike.
Yeah, it's one you wonder what's going to happen when you take soft red wheat $1.35 below the outbreak of the Russia-Ukraine war, and then you hear about a drone strike on the Kremlin, and now the London Telegraph this afternoon before the close reported that people in Russia are saying Zelensky must be eliminated. So somehow we got back to looking at that Russia-Ukraine war, Jesse. I don't know how it happened, but I thought things were going fairly well.
Well, it's interesting that you think about those headlines, and really this market overall has been headline driven here this week, and a lot of the headlines were fairly negative here, Mike. And then, we come back in with this Russia-Ukraine situation and news on Wednesday to help prop us up. Federal Reserve's really been on the mind of traders, though, this week. I think let's start there. As I mentioned at the top, we got that expected increase in interest rates, 25 basis points. What is your take on what we saw from the Fed and just what direction we could be going from here, Mike?
Yeah, charts today are going to be before the close on everything. Mr. Powell is talking right now as you and I go on the air. He just put across the news wires, I think, a couple really big pieces of information. He did say that inflation was running too high. There's a long way to go, but he also said that the banking industry and the financial situation is something that will cause them to move meeting by meeting on their policy rates. That brings to mind and into focus for me, Jesse, this 2-year U.S. Treasury yield chart. So this is not the bond chart. This is the opposite side of the bond chart. This is the actual yields, the percent of the coupon or interest paid on the treasuries. That 2-year yield chart has a very strong support level drawn off those 2021 lows, and it has been tested 3 of the last 4 months. What we're hoping for in the commodity sector, I think, is that we take that yield support level out, that purple line, and we see the stochastics in the bottom part of that chart are already starting to give a sell signal in terms of crossing over. But if we can take that support line out on a monthly closing basis, that should shut down the trade wanting to buy treasuries, which then inflates or pushes up the US dollar. So if we took that support line out, I think we would have at worst a dollar that would move sideways. I can take a dollar moving sideways when it's trading at 100 or just below 100. I don't want it back up at 102.50 plus.
Yeah, and very interesting here when you think about the financials and obviously a lot of recessionary fears, a lot of stagflation talk out there. And I think just moving from here, as you said, watching the banking situation, it's going to be interesting the next couple of months with the Fed meetings, et cetera. I really think that this financial market and how it plays into the commodities is going to be a week by week, month by month type of trade here as we move forward through the summer, Mike.
Yeah, and see, I think what's going on here, Jesse, is what we had talked about at the end of 2022, especially before China released the COVID and broke their COVID lockdown. We're really dealing with a recessionary mindset building in this trade. and that the Fed is pushing us into recession. One of the senators was just on CNBC before Chairman Powell talked, and she just point blank said, she said, look what the Federal Reserve is trying to do. They're trying to create job losses. You can't argue with that. I mean, that's really what the bottom line is. With a blunt interest instrument like monetary policy, you're trying to shut down demand, and aggregate demand and commodity values really have a close association with each other because of deflation, inflation, and those currency markets. And so when I saw the wheat break below its 200-month moving average earlier this week, as I said, we went down to the lowest level since I believe March of 2021. We're $1.35 below the outbreak of the war between Russia and Ukraine, and you see the hard red wheat struggling to hold its lows from last month. You've got to put some of this at the feet of the macro because of the weakening of the crude oil market and the strengthening of the dollar before the Fed came out.
Well, I'm pulling up on the video feed the monthly HRW wheat chart, and just to go along with this wheat discussion, obviously we mentioned the leader to the upside on the day Wednesday. Wheat's been curious to me, especially the first couple days of the week, just continuing to push lower, breaking through those lows you mentioned, because we still got poor crop ratings there in Kansas, where you're at, and farther to the south. And you think about all of that issue, yet we were just pushing lower. But it feels like here that maybe this is the point where wheat just got to be too cheap, for lack of a better word there, Mike.
Yeah, and you've also got over in the Black Sea region a situation where Ukraine is not going to have more than, they're going to be at least 5 to 7 million metric tons short on their production this year in 23-24 versus 22-23. And that's, going to be dramatically lower than what it was before the war. And the trade, again, has kind of been whistling past the graveyard there. What I like about this chart, Jesse, is number one, the hard red wheat was able to get back up above its close from April. That was really critical to gain back a higher monthly bar. Now we've got a black bar for the month of May at this point. That's very, very important. We had a counter seasonal break to the downside in April. What I've been pushing with clients and subscribers, especially with the Federal Reserve and the May WASDE report, is an idea that we could have a May counter seasonal rally led by the hard red wheat. If you look at the stochastics on this chart, it's the exact opposite mirror image of that 2-year yield chart. We actually just turned a buy signal this month on that stochastic with that purple line going above the green line in the bottom right-hand corner. So you can see how these outside markets and seemingly unrelated markets like a 2-year treasury yield versus a hard red wheat belt monthly chart, they actually do have quite a bit of similarities in terms of looking like mirror images of one another in certain aspects.
Mike, I want to touch on crude here as well before we get over to corn and beans. Obviously, a big break the last couple of days in crude oil, and I know that's going to tie into this. I wonder, a couple thoughts with crude breaking back below 70. Does the U.S. finally refill the Strategic Petroleum Reserve at these levels? What happens with crude just continuing on? Demand worries, recession fears. How does it play into this market? Because, we saw Tuesday, crude was kind of a headwind for commodities, whereas Wednesday, the money flow was just too good in grains, and it didn't matter how much crude went down. So what's your take on crude oil here at this juncture?
No, crude oil is still the best canary in the coal mine, along with copper, as to what the world is thinking about demand and global economy. And the IMF has put out some fresh numbers on Asia's economic growth. The crude oil did not like those numbers. And you bring up the SPR. Interesting you did that today. We saw the weekly numbers come out on the stocks figures from Department of Energy. SPR is the lowest since October of 1983, Jesse, at this point. They better start refilling that SPR. That's all I can say, especially at these price levels. And I think on that same note, in terms of energy, the ethanol stocks were at their lowest level since early December of 2022. That didn't grab a hold of the corn market until late in the day. And we really haven't priced in the E15 approval by the Biden administration given late last week. So again, overshadowed trade is the name of the game here. And the crude oil is a big reason, as you say, rightfully, it is a big reason why we've been overshadowed in the grains until today with the wheat and the Russia situation specifically.
Why do you think we haven't priced in that E15 news from last week yet in the corn market? Do you think it's just going to take some time possibly here, Mike?
Yeah, I think it's time, but I also think the recession mindset overshadows and overpowers anything you talk about when it comes to supported demand, Jesse. Now, having said that, that's the futures market. If you look at the spreads, you see the May D's corn spread hit $1.25, a new contract high on Tuesday.
Mhm.
Cash basis is rallying in corn in many areas now and along the rivers, not just ethanol plants. So I think the cash market is overpowering the futures market when it comes to the fundamentals that you bring up. It's that the futures and the funds still are stuck in that macro mindset. But I think after today's Federal Reserve update, if the dollar doesn't go screaming higher and that 2 year yield chart does see a break in support trend line, I think then the funds may jump back on board with some commodity buying.
We are talking today with Mike Zuzolo of Global Commodity Analytics. Mike, let's talk a little bit more with corn to beans, and I'll pull up on the video feed the corn bean ratio chart. We've been looking at this with you for off and on for a couple of weeks now. Look at that new crop, that Nov December bean corn spread here. What's the latest you're seeing there in terms of that spread?
Yeah, important price action in the soybeans this week because we were able to get back up above 1265 in the November. That was one major resistance level I wanted to see if we could close above on a weekly basis. That was being done because the trade was buying beans and selling corn. Why was that when the planted acreage numbers would have supported the idea of buying D's corn and selling Nov beans? I think it was because of the wheat-led declines, Jesse. So if we get wheat out of the way as a bearish sentiment indicator and dragging effect on the corn, fundamentally, I think the corn should start to gain on the new crop beans. The second point I'd make on this chart is when we saw the beans rally, we saw a private trade guess come out of 157.7 on soybean production for Brazil. That really turned some heads, and it was almost as if the beans looked over their shoulder, looked at corn and wheat essentially and said, are you guys coming? Are you going to follow us here or not? And because corn and wheat didn't follow, the beans fell back pretty abruptly and pretty dramatically, led by the soy meal market. So I think we're still in that situation where the beans can try and go it alone for a time, but if they really want to change course and trend, we've got to have, in my opinion, a change in trend in the grains first.
Well, Mike, overall with the grains, another aspect here, typically this time of year, we're talking weather. And I feel like with all the outside market influences and the charts and the fund movement, weather kind of is on the back burner, even though it should be more to the front right now. Obviously, we're expecting pretty good planting progress this week with nice weather, warmer temps all the way up into the northern plains. How much do you think weather is or is not playing a role in these grain markets right now?
It's a phenomenal point to make, Jesse, because I see the weather in the United States and how the trade is making assumptions as very similar to the assumptions they made about the Russia-Ukraine war. They've gotten too comfortable in their mindset about El Nino and plenty of rain and plenty of cool temperatures and a big crop, kind of like 2009. I really sense that strongly in the market right now. And much like the Black Sea situation, this market has not gotten the weather pattern that it was wanting 3-4 weeks ago. We still don't have enough rain in the hard red wheat belt for the most part. You saw that, as you said, on the crop conditions. The 30-day and seasonal drought outlook came out earlier this week, barely got any attention by the market, but it showed drought expanding out of Iowa into Western Illinois around Davenport. No one is talking about that in my opinion. So I think it goes back to the timeline. I think it goes back to literally having your back up against the wall like we saw today with the bearish wheat traders and them just having to face the music that they were wrong about Russia, Ukraine. I think you're looking at probably June before you really start to take hold with the trade wanting to back out of their short position, that El Nino mindset.
Great thoughts there. All right, let's move over to livestock, and I'll pull up one more chart on the video feed here, looking at cattle and corn together. This cattle market, I'm a little nervous here, just with some of the action we've seen in futures the last couple of sessions. But I'd love your thoughts there, and to walk us through this final chart we have today.
I'm getting ready to. I've been working on a special livestock report. Got delayed because of my sickness, but this is probably the most important chart of the whole special report because it's going to, I think, make the difference between whether we're profitable or not when it comes to cattle. And what we've seen in the purple line is the cattle market moved straight up along with the corn at the end of 2020 or beginning of 2020. We were able to top the corn out in that early 2022 time period, about a year ago, plus or minus a month. That was exactly when the cattle made a low. And so the cattle have been able to offset the high feed prices because they've outpaced the corn price. I'm really nervous that cattlemen are going to focus too much on the fat cattle price and not enough on the corn price. And what I mean by that, Jesse, is I've heard from more than one cattleman and feeder that they think that the corn price is going to be closer to $4 than it is $5 6 months from now. I'm very nervous that's not going to happen, and they're going to really bleed red in their break evens if they don't get their corn locked in. So this is one of the biggest things I'll work through on the livestock report that I'm getting ready to put out. Having said all that, I hope that this is a correction in the cattle. I think it is because we still have a 170, 175 cash market out there with August all the way down to 160 already, in June around 161. So we got plenty of discount in the futures versus the cash. So I think this is a necessary, healthy correction, but watch that 159 level on fat cattle.
Are you worried a little bit out there in feedlot country that we're seeing a little more cattle being committed for deferred delivery? It felt like we saw a slight uptick in that here in the last week or so. Is that concerning you at all, Mike?
Yeah, that's where the feed prices come into play, especially. I'm not as nervous about the cattle and the hogs as far as marketings and the price action during that time period. That's probably actually going to be good because I think we'll have peaked on our hog numbers. You probably heard about the 30 plus sow breeding facilities that Smithfield's going to shut down in Missouri. We're going to have tighter livestock numbers in general by the time we get to Q4. And that should support prices. But it goes back to what are our corn acres, what's our yield, and if you're dealing with $6 corn, have you got a marketing plan ready for that if you're a cattleman?
Well, and I think too with hogs and cattle here, a down day in across the board on Wednesday, but I know the recessionary fears are going to weigh in there too. What are people buying at the grocery store? What happens if we start seeing job losses? If money's tighter, what are people buying at the store? We've talked about this, Mike, and I think really it's just I hate to sound like a broken record continuing to bring it up, but I know that it's going to be a topic of conversation and something that we need to be prepared for in this market.
It's just a matter of time. That's how we look at it, because once those ground beef prices go up above a certain level, I think you really are going to start to see a substitution effect. I think the key is going back to 13, 14, 15. What we had were strong exports. We need that again. That takes you all the way back full circle to that currency market in China and India, as being those two countries this year are supposed to be over 50% of all the world growth. And if you throw in Asia as a whole, we're looking at 70% of all the growth that's coming this current year is going to have to come from that area. That really puts a lot of burden on our currency to stay weak.
Well, Mike, we bounced around, covered quite a bit here today. Button this all up for us real quick. Final thoughts, anything else you want to reiterate for listeners today?
Yeah, this is the prime time for us to find a low here, led by the wheat. We go into the May crop report. Hopefully the wheat numbers go down, the yield goes down because of the crop conditions, and that kind of solidifies a low in the wheat market and gives us a chance to find some hedging targets at prices above the market for the row crops, starting with beans. So that's the game plan right now. Stay tuned and go to globalcomresearch.com, get a trial, and see if we're on track or not.
Globalcomresearch.com. That is com with two M's, globalcomresearch.com. Mike Zuzolo with Global Commodity Analytics. Always a pleasure, sir. Thanks for joining us this week, and we will talk to you next week.
Thank you for having me, Jesse.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.